We now move on to our final presentation of this evening. Last but certainly not least, I am very pleased to be able to introduce Charlie Bachtell, Chief Executive Officer and co-founder of Cresco Labs. Cresco trades on the Canadian Securities Exchange under the ticker symbol CL and in the US under the ticker symbol CRLBF. Cresco is one of the largest vertically integrated multi-state cannabis operators in the United States. The company is pursuing a consumer packaged goods approach to cannabis. Cresco's house of brands is designed to meet the needs of all its customer segments and patients and includes some of the most recognized and trusted brands in the space, including Cresco, Remedy, High Supply, Reserve, Good News, and Mindy's Edibles. Cresco's national dispensary brand, Sunnyside, is a wellness-focused retailer designed to build trust, education, and convenience for both new and existing cannabis consumers. Cresco boasts a leading market share in Illinois and Pennsylvania, which we believe to be some of the most attractive cannabis markets in the world. The company also has a solid presence in California and growth opportunities in several other attractive markets, such as Ohio, Massachusetts, and Michigan, to name just a few. With that, I would like to turn the call over to Charlie, who will tell us more on Cresco Labs and the opportunities ahead. Charlie, over to you.
Andrew, thank you for the introduction. Can you hear me okay?
Loud and clear, thank you.
Excellent. And let's hope now that the training they gave me yesterday on how to operate this holds true here. So thanks everybody for taking the time to come and see the Cresco presentation today. I appreciate it very much and look forward to going through this with you. We're going to take you through a bit of the, let's see here. I am controlling the screen. There we go. So we're going to take you through a bit of the history on sort of who we are, our approach to the space, how we plan on delivering superior growth, and then some closing thoughts on the org and the industry. So to start off, who we are, Cresco Labs, founded in 2013. At this point, about 1,800 employees across the country and operating in 9 states. You see the number of cultivation manufacturing facilities there, total square footage that's currently operational. We have 19 brick and mortar retail locations that are open with licenses to be able to open 10 more. At this point, we have products that are carried in about 780 dispensaries around the country, reaching about 60% of the addressable market. We touched on, Andrew had mentioned, a very CPG approach to the cannabis space, which requires brand development for occasion-based and for customer bases that also has a very broad and select SKU set. On the right side of the column there, you have financial information from our most recently reported quarter, which was debuted last week. I think historically there are a couple of points of distinction that I think the investor community and analysts have seen with our org in our peer set. To a certain extent, and I just caught the very tail end of Andy's presentation with GTI. There's a lot of similarities between the top tier multi-state operators. There's even a decent amount of overlap in the States. It's not a coincidence that us and GTI, we both started in Chicago, in Illinois, and sort of expanded outwards from there. I think over the years, as far as points of distinction between the peer set, a few things that have always come up is strength of our management team. And this slide gives an indication on sort of the backgrounds and the experience that we've been able to bring into the org. We always knew that this was a very important part of not only getting an organization off the ground, but in order to maximize the opportunity and take advantage of the opportunity, scale the organization the way that the organization needed to be scaled, you needed a good amount of traditional experience to be part of that fold and part of the development. So if there's something that I think I've done an okay job of, me and my founding group, is that we've been able to attract some great talent that has helped us really build this organization the right way over the last couple of years. a couple of other areas as far as like the three main areas that we've always found points of distinction: strength of management, but also a very targeted approach to states of relevance. Our strategy for the last 3 years on how we were going to expand across the country, it really has two parts, and it's pretty simple. It's building the most strategic geographic footprint that you can, and then developing material, meaningful market positions in each of those markets. And for us, what defines a state as a key strategic state is it's an appropriate regulatory structure. We do like, we like states that have sufficient regulation. I got into this industry because of my legal background in highly regulated industries, and I saw the opportunity and sort of the development and where cannabis was going. And that's what attracted us to the industry in the first place. So the first part of our definition of a strategic state is the appropriate regulatory structure that allows for success and sufficient obligations on operators. And then part two of it is that it has a population mass behind it that'll support a robust marketplace. So as you can see from our map here, the 9 states that we're in, 7 of those 9 states are either in a top 10 from a state in the country from a state population, or top 10 in the country from a city population standpoint. So appropriate regulations matched up with a sufficient population to be able to support a robust market. I would say that the third point of distinction that usually comes up is the true CPG approach to the industry that we've taken. From day one, a few things were apparent to us. One, this industry was never going to get less regulated. 2, it really just needed to be normalized and professionalized. And 3, cannabis was a consumer packaged good, whether cannabis knew it at the time or not. So while our thesis is pretty firmly rooted in the idea that you need to be vertically integrated, especially now in the development of the industry with the fragmented nature of the state by state by state approach, but we do prioritize the middle 2 verticals of the value chain. We think the creation of branded products and the distribution of those branded products into other stores will provide the most long-term value for the organization and for shareholders. Again, there is no secured, structured supply chain, and definitely not one that crosses state lines. So cultivation and manufacturing are a big part of, especially in a limited license structure, it's a big part of success at this stage of the industry. And as is retail, brick and mortar retail is definitely an important part of having success and establishing yourself as a leader in the industry today. But we think the longer term vision, if you've been able to effectively build brands and products that resonate with consumers, and you have the facilities to be able to distribute those into all of the future dispensaries that are going to be opening across the country, that's where you're going to solidify not only the upside of long-term value, but you're also sort of addressing and mitigating the downside risk that is definitely associated with cultivation, potentially from interstate commerce in the future, and then also brick and mortar retail, fairly disruptible as more and more dispensary licenses are issued in states that even have limited structures. So those tend to be the areas where Cresco has distinguished itself from its peer set, and again, really describe the approach that we have brought to the cannabis space. And here's a bit of the rationale behind the focusing on the CPG aspect of it too. Traditionally, margins in EBITDA tend to be better in that category, or that vertical of the categories. And then also from a Q2 revenue standpoint, you could see sort of how the peer set is prioritizing retail versus wholesale, and how we as an organization compare to the set. Delivering superior growth. Some elements here, again, mainly just recapping and giving a visual description of the inflection that I think has been made very clear through the Q1 for a lot of the top tier operators, and definitely Q2 of this year. I think everybody in that top tier, top 4 MSOs and then some. Everybody had a really strong quarter, and it really was a quarter where operators were going to be tested. As I mentioned on the earnings call in Q1, I said, operators, the best operators in this industry, it was going to be seen by the performance in Q2, not Q1. A lot of the headwinds, not only from the scaling up standpoint, because scaling is challenging, but of course with the COVID related impact, all of that headwind. And it's not just, whether or not the consumer base or the demand is there, but it's, have you come up with sufficient processes, both for your corporate related employees, for your production facility employees, for your brick and mortar retail employees? Those are three very different businesses operating in the same organization, that have different needs and different sets of circumstances that you needed to adjust for. And I think I wouldn't want to speak for the entire sector, but I think it's a pretty safe assumption that all of us substantially had to modify our ways of working in order to be able to face those headwinds over the last 5 months. And I think what you saw from the sector in the second quarter is that, of the top tier operators, we all did a fairly good job of being able to deal with all of those twists and turns and the nuances associated with March through the end of Q2. And it goes without saying, I couldn't be more proud of our team. 42% sequential growth, I think at $28 million in absolute growth. It was the highest top line growth in the industry. So I think the team did an incredible job of managing the change that was needed throughout the quarter. So very, very pleased with what we were able to produce. And this is a bit of a story of how we prepared for 2020 in advance, and also the root of the majority of the growth that we were able to see in Q2 was significant reinvestment in the business in our two key markets of Illinois and Pennsylvania, where historically we've been top market share, near top market share for the last couple of years. And we love these markets. We've always thought that, from our original sort of thesis standpoint of the most strategic geographic footprint that we could create, Illinois and Pennsylvania were well-structured programs where the regulatory obligations that were put on operators were going to separate those who can from those who can't. And then at the same time, you're talking about the 5th largest and 6th largest states in the country. So there definitely was that population behind the regulations to be able to support a robust market. Starting last year, we started deploying significant amount of capital in both of those markets to build out the infrastructure to be able to support our CPG approach. So again, prioritizing the ability to create and provide branded products to the marketplace started to show itself in Q2. In truth, the full flex of these facilities is not going to be felt until Q3 and then continuing into Q4. But we did see some of that appear in Q2 to great results for us, and really was a significant driver of the growth that we had in Q2. But it wasn't the only driver of it. One of the things that we were very proud of with the quarter is that we had in excess of 30% growth from a revenue standpoint in every one of our markets except for Massachusetts. So 8 out of our 9 states, we had at least 30% sequential growth quarter over quarter. And that included in California. California, as a state itself, had a decent quarter, up 10% sequentially quarter over quarter. I think it was up 18% year over year. And we were able to increase our revenue 41% in California in Q2 over Q1. So that was really us being able to bring these assets that we had either organically developed, or I should say acquired in 2018 when we first made our entrance into the state, just on the cultivation side of the business, but then also with the Origin House acquisition and the assets that came with that acquisition that closed January of this year. Q1 was primarily about integrating those organizations and really consolidating those assets under one umbrella. And then in Q2, you started to see some of that optimization really appear. So not only was the bottom line improved by creating a healthier business through identifying synergies and the integration process, but you saw that top line growth of 41%, which is very encouraging. So we like what we're seeing in not only our main two historic states of Illinois and Pennsylvania, but across the entire footprint, including California. Here's where we go a little bit deeper into the other states that we're in, and also where, if we're looking at the outlook for Cresco, the second half of the year is really going to continue to be the main three-state story. It's that Illinois, Pennsylvania, and California assets really starting to show what they can produce. But we're really excited about the 2021 narrative too that's developing, and that's additional investment and market penetration and share into these other markets. So again, it's nice to be able to grab market share and really take market share in California, but we're making those investments in infrastructure in states like Massachusetts, Ohio, and Michigan to really lay the groundwork for that 2021 growth. Over the last 3 quarters, we've put together financings and created the funding opportunity to deploy $50 million, $50 million into infrastructure build-outs in those 3 states that I mentioned, Massachusetts, Ohio, and Michigan. That again, in consistent nature with our story here of what we did in Illinois and Pennsylvania, we're laying the groundwork for being able to develop that similar story in those 3 states. That'll really be the 21, at least 1H 21 story for us. A quick amount of time we'll spend on the brand portfolio. As was mentioned earlier, we took a branded house of brands approach from the very beginning. It was pretty obvious to us that it'd be very difficult to reach a critical mass of cannabis consumers with a branded house approach, with only having one name or one brand. One thing that's very apparent is the customer base for the cannabis industry is quite varied, and it's all walks, and it's all levels of society and economic status as well. And so, good, better, best, value to luxury, and premium are all at play. And if you really want to have that market share and that shelf presence, at least our strategy was that the house of brands approach to try and provide a very specific option for each of those customer types. So you're addressing your consumer base, your audience, in very direct, very specific, and very appropriate ways, was going to be the way that you'd create that broad shelf space and market share. And so that's what we've done. And here's just a quick reflection of our main brands: Cresco, Mindy's, High Supply, Remedy, Good News, FloraCal, Reserve is another, and there will be others that will be forthcoming in the near term and medium term. And here's how they lay out on the chart of good, better, best, and then also the category play for heal, wellness, and then play. So again, wanted to have a nice broad spectrum for the majority of consumers that are going to come into a store. We wanted to have a product offering that spoke to them directly. Sunnyside is our retail brand, and I think if you know our story, you know that retail is, I would say, a newer element of the business to us. First started when we won dispensary licenses in Pennsylvania back in 2000. I think they opened in February of 2018, and then through M&A and other application wins, we built out a fairly robust retail platform that now has 19 stores open and the ability to open 29 total. And what you see from us here is, again, a consolidated brand where we're focusing on the wellness, the normalization of cannabis. So very appealing, very comforting, and also focusing on traditionally fundamentally sound retail plays. So population density, whether that's a great sort of a walking score or in areas where big retail is done. One of our more recent stores just opened up in Schaumburg, Illinois. And for those of you that might not be familiar with Schaumburg, that's where basically everybody in the Chicagoland area, the greater Chicagoland area, goes to do their big store shopping. Your IKEAs, your mall, the mall in Schaumburg has north of 27 million visitors a year go visit that mall. So basically anything that you'd want, from buying a car to, again, furnishing your apartment, it's kind of all done in this consolidated area. That store has been phenomenal for us. And that's a sign of more to come. And then let's see here, retail platform, performance of retail. This gives you an idea, again, of the inflection that you're starting to see from a revenue standpoint, and also where we still have the ability to expand our footprint. As you can see, we like to have a full, broad number of stores, the most amount of stores that you can have in these limited license states, and you can see the states that we still have room to grow into. In summary, I think we're positioned well to deliver that sustained and profitable growth. It is simple, right? With top line growth, margin improvement, and capital agenda laid out. And I look forward to sharing more of our story with you in the coming quarters.
That's a great overview, Charlie. Thank you very much for providing that presentation. We'll move on to Q&A now. As with previous Q&A sessions, feel free to, the audience can submit questions through the Q&A function of the Zoom platform, over the YouTube live stream, or directly to me via email. I do have one emailed question already, so I'm going to lead with that because I think it's relevant. One of the you are one of the few US MSOs that have entered market or have entered California at scale. How have you found your experience in California, and what are you expecting to drive and benefit from California over the coming quarters and over the next coming years?
Sure, a great question. For us, California, it fit the definition. It finally fit the definition of a state that we would be part of our strategic path forward, right? So it fits in the strategic geographic footprint. It is a state with sufficient regulatory oversight as of January 1st of 18. And while it doesn't necessarily have a quote unquote limited license structure, the way that California has unfolded has created a scenario where that licensing process and the regulatory framework that's in play is challenging. It's a challenging sort of regulatory structure and framework to deal with. And Cresco is regulated cannabis. I mean, that's what we are. So we really relish and thrive in those kind of challenging regulatory environments where we can do it, and it's challenging for everybody, but we bet on ourselves that we can do it better than others. And then without question, you've got the population support behind it. You're talking about, I don't know, is it the 5th or 6th largest economy in the world? So I think it's also without question, it's the largest cannabis market in the world. So for us, if we found a good way into that state, we knew that it was a state that we wanted to be in. We also knew that it was going to be challenging. There's very few things about California that are easy, because when you do have that type of population and you do have that regulatory structure, you also do have competition. But I think what we've shown in this last quarter is we are taking market share there, and it is our hypothesis that we put forward was if we execute the way that we execute in other markets, and we bring the Cresco playbook out to California, it will be successful. And it really it boils down to understanding how to work within the regulations, and then it's operational execution. It is dotting I's and it's crossing T's, and it's making sure that you've got that consistent quality and always available product. And that when you tell them you're going to be there on Tuesday at 2 o'clock, you actually show up on Tuesday at 2 o'clock with your delivery. So it's showing that it's going to, we're able to replicate our success in that state. It hasn't been without its challenges. We definitely devoted a substantial amount of resources and executive level bandwidth to making sure that that integration with Origin House went as well as it did. But I think the success is apparent in that I think we're ahead of all, not only internal but external expectations on how we've been able to turn that asset into Cresco, California in a shorter period of time than people expected.
Thanks for that overview on that market. I want to take a step up and look at the CPG business on the entire portfolio. You're one of the largest manufacturers and distributors of branded cannabis products in the U.S. 55 million of wholesale revenue in Q2 alone, and I don't even believe that includes your intercompany sales.
Right. Company eliminated.
So what are the next steps that investors are going to see here for continued steps forward in that CPG business? And from your remarks in the presentation, I thought I noted something on the branding side to come, and perhaps definitely some more expanded production capacity in the back half of the year. But is there anything else in addition to this?
Yeah, I think you hit it on the head, and we do benefit from the fact that some of our main markets are also these really hyper growth markets that are supply constrained, and that will be for the foreseeable future. And so I think being able to effectively execute the CPG strategy requires that you have the infrastructure to be able to fill the bottles, right? And not only from the growth side, the cultivation side of it, but every other, every element of the rest of the process through supply chain and including logistics. So for us, we're going to benefit from the fact that we put in that hard work, that we went out and we raised the capital, and that we built those buildings, and that's in our rearview mirror at this point. So there's still there's challenges still in scaling up and getting the full utilization of the facilities, but that is the Q3 and Q4 story that we're very excited to be able to tell. So as it relates to additional brand, I think any brand focused organization, CPG focused organization, innovation, R&D plays a role, a substantial role in how you continue to make sure that you've got fresh offerings. You're executing on what's a proven model, but you're always testing to see what's going to be the next thing. And that's, we're focusing some energy there too. And that's what you'll see in the coming months from the brand strategy, is a couple more new opportunities for the consumer base to enjoy.
That's excellent. I also wanted to touch about a comment you made, the potential for interstate commerce. And, it got me thinking, as a company that focuses more on the wholesale distribution and branding side of things, would Cresco be advantageously positioned to benefit from interstate commerce more so than a company that's focused on retail, where you can't really pick up and move that retail location? And how would you see that kind of playing out?
I think it goes back to the original strategy that we built for the organization, and identifying those middle two verticals as not only driving the most upside opportunity in the long term, but also those downside risk mitigators. That's why I think when interstate commerce does eventually come, and by no means do I think that that's a near-term thing. I think that's, I'd be very surprised if 5 years out from now there were significant changes of any kind related to interstate commerce. But when it does come, because it will at some point in time, the fact that you've been able to establish brands that matter to consumers and have that stickiness, I think then you'll be able to take advantage of the opportunity and potentially be a buyer then. If somebody could meet the quality standards that we had with also that diligent adherence to supply chain requirements and really establish a secure supply chain, and they could do it for less than I'm able to do it, I likely become a buyer, and then I'm managing my brands and focusing on sales and distribution and everything else that goes into selling consumer products. On the retail side, I think I don't know that interstate commerce necessarily impacts the brick and mortar retail focused organizations just in as much as being brick and mortar retail focused impacts them. I think, there's very few examples of people that are dying to get into brick and mortar retail right now, and for obvious reasons. I think we also saw some of the vulnerability of brick and mortar retail. You're not going to see it in the numbers because these states still don't allow, most of these states that we're in don't allow home delivery. But we've flipped entirely to online ordering during this COVID era. I think I do believe the entirety of Q2, at least in Illinois, is 100% of those orders, except for medical, so I shouldn't say 100%, but 100% of the adult use orders were received through the online ordering system. So it goes to show you this move towards being able to virtually order as opposed to coming into the store and spending the time and having that face-to-face. There is the likelihood that that trend will continue, especially as COVID continues to hang around and the in-store shopping experience just becomes less and less appropriate. Where when home delivery is allowed, that disruption to brick and mortar retail, I think, happens pretty quickly. There's always going to be a time and place for brick and mortar retail, especially if it's experiential, and when consumers are experimenting, it's very important. But after visit 5, after visit 10, is it easier to order on the app and have it delivered to your house like so many other products these days? We think so.
Charlie, we thank you very much for joining us today and for that overview. You've given us a lot to think about. So we were very happy to have you on today.
Appreciate the opportunity. Thanks, Andrew.
Great.